Ladies and gentlemen, have you ever heard somebody say the government cooks the data? Do not trust the government numbers. Do not trust the government data they give you. Well, a day like today is exactly why they say that. I remember the first time I ever heard somebody say that. It was my own dad said that. My own father told me that when I was a kid a few times. Non-farm payroll growth revised down by 818,000, the Labor Department says. Oh my gosh. Good day for the public count. $20,000 up here today. Small caps continue to roll. Honest up 8% plus. Fubo's up big. Elf up big here today. Toll Brothers all-time highs. Who would have thunk this? Toll Brothers, a home builder with mortgage rates the highest they've been in so long, with home prices absurdly high. You'd think no one would be buying new homes. And yet, Toll Brothers stock just hit an all-time high. Incredible. Few things I want to speak about here today. It's a lot. This is going to be a busy video here today, folks. This is what we call action-packed. We're going to start out talking about this Bureau of Labor Statistics BS situation on our hands. Absolutely insane. We're going to go through oil. Oil's acting very suspect, and it's very important we all keep an eye on what's going on with oil because this has ramifications of what it means for the economy and many other various things. So we're going to talk about some suspect things I'm seeing in regards to oil markets. Third thing we're going to speak about is the Fed minutes, something very important in regards to that Fed minutes that came out here today. Fourth thing we're going to talk about is small caps. What's the next move? What are my favorite 3 small cap stocks in order for the remainder of this year? We're going to speak about that in this video here today. We're going to talk about Toll Brothers. We're actually leaving Toll Brothers for last to speak about that and kind of what my expectations are there. And I think there's some interesting situations brewing. And then we're going to speak about my next moves in this market, which there's quite a few of them, okay? Busy video here today. I got 2 questions for you. 1, are you subscribed to the channel? 2, do you even smash that thumbs up button? I appreciate all of you that are subscribed here and that smash that thumbs up button, okay? Alrighty, guys, a lot to get through here today. Let's start getting right into this. So to start out here, right off the bat, non-farm payroll growth revised down by 818,000, Labor Department says. As part of its preliminary annual benchmark revisions to non-farm payroll numbers, the Bureau of Labor Statistics said the actual job growth was nearly 30% less than initially reported. Listen, guys, listen, okay? This is why people don't trust the government. This is exactly why. And it makes it even worse when you're in an election year, right? When you're in an election year and all these sorts of things are supposed to matter, right? What's the jobs numbers? Like, how's the economy actually doing? When you get this big of a revision down, this is why people have trust issues. I fully understand it. Like, I get it. Like, I get why people have trust issues with the government. When you see stuff like this, man, it's not just a bad look, it's a horrible look. The revision to the payrolls level of negative 0.5% is the largest since 2009. Yeah, anytime you get something data pointing back to 2008 or 2009, it should send off like alarm bells. Like, no, that's not good, right? At the sector level, the biggest downward revision came in the professional and business services, which you would kind of think of that as like higher paying jobs, right? Where job growth was 358,000 less than initially reported. Oh, this is so bad, right? Now, you got to say, why didn't the market freak out? I think that's a fair question, right? This is such a horrible data point. Here's why. These 2 paragraphs tell you everything you need to know. Even with the revisions, job creation during the period stood at more than 2 million, but the report could be seen as an indication that the labor market is not as strong as previous BLS, Bureau of Labor Statistics, reporting had made it out to be. That in turn could provide further impact on the Federal Reserve to start lowering rates. The labor market appears weaker than initially reported, says this chief economist. A deteriorating labor market will allow the Fed to highlight both sides of the dual mandate, right? Oh, we got to worry about inflation, but we also got to worry about maximum employment. And investors should expect the Fed to prepare markets to cut rates at the September meeting, right? This gives them even more ammo. So if you're wondering, why didn't the market freak out on this? Like, such a horrible number, 818,000 down? Is because now the market looks at this and say, oh, this is even more proof the Fed's going to start cutting. We're going to start getting a bunch of cuts here. And the market wants these rate cuts, right? That's why the market didn't freak out. Now, jobs growth gets its biggest downward revision since 2009. Why is this time different? CNBC put out this article here today, right? Trying to make it sound like this time's different. The data agencies make mistakes, sometimes big ones. They come back and correct them often, even when it's 3 months before an election. In fact, economists at Goldman Sachs said Labor Wednesday that they think the Bureau of Labor Statistics may have overstated the revisions by as much as 500,000 unauthorized immigrants who are not in the unemployment system, but were listed initially as employed, amounted for some of the discrepancy, along with a general tendency for the initial revision to be overstated, said the Wall Street firm. The jobs data could be subject to noise from immigrant hiring and can be volatile. But there's a vast suite of macroeconomic data that if the economy were tanking like 2009 would show signs. I mean, here's the deal, okay? If the government can't get simple stuff like this right, and they not only do they not get it right, they get it off by 30% roughly, which is a crazy number, right? How can the government tell you we need to shut down the economy for something like a Rona, right? This is why people have trust issues with all this stuff. Because you're they can't even get government agencies, all these people are paid all this money to get this stuff right. And not only do they not get it right, they're massively wrong in massive revisions, right? That's why people have trust issues. You got to understand that, right? You got to really understand that. It's an incredible situation. Now, speaking about things that are suspect, crude oil is acting, I would say, pretty darn suspect. So here we are, August 21st. Man, is oil having a trouble. I mean, oil $72 in August? That's interesting, right? That smells recessionary. I'm just going to be honest with you guys. With oil doing the lack of what it's doing, that smells recession. You've got to think with everything going on in the Middle East, right? You got to think about Harris in some polls is starting to take the lead. People could look at somebody like a Harris as being negative toward the oil industry in the United States, potentially, right? All that's we'll see. But at the end of the day, with all that worry, all that concern, oil can't do a thing. That smells recessionary. Now, I do believe, little conspiracy theory from me, I do believe all the commodities markets are heavily manipulated. I do not have any concrete proof of that. Well, there actually is some concrete proof of some investigations that were done in the past to certain commodities. But in terms of my opinion is, all these commodity markets are extremely manipulated. And honestly, if you were a government, why would you not try to manipulate? Think about it, right? I mean, why wouldn't you? You could be talking about the difference between elections being won, not won, right? And you could always use all other governments might be trying to manipulate these markets. Let's say you're United States, right? And you're we should try to manipulate the market. What do you have as an excuse to go ahead and do that if you were to do that, hypothetically, right? Well, let's think about it for a moment. You could say the Middle East manipulates these markets all the time, right? They do all these different tactics. Who knows what they have going on behind the scenes? They do all these other tactics publicly. Oh, we're going to cut production here. We're going to cut production there, right? Obviously, all the different conflicts that go on all the time that are excuse to send oil up. So then if you're the United States, you have all these different excuses that why you should be able to manipulate the market through different tactics. So anyways, I have no concrete proof of that. It's just a theory. It's just a conspiracy theory. Now, in regards to oil, the fact around oil is this baby's down over the past 10 years. 10 years, folks. Crude oil is down. When you think of what has gotten cheaper in the past 10 years, almost nothing, right? I mean, just think about it logically for a moment. What has really gotten cheaper the last 10 years? Almost everything is substantially more expensive today. Labor, a Big Mac, a burrito from Chipotle, right? A house, a car, it doesn't matter what it is. And yet, all that's happened and crude oil's gone down over the past 10 years? That's interesting. That's very interesting, right? Now, you might say, well, it's probably because consumption's gone down a bunch over the past 10 years because now electric cars are so big. Well, I would have to debunk that. The truth is oil consumption is all-time highs. 2024 will likely be an all-time high for oil consumption, right? 2023 was far stronger than 2013, 2014. And so oil consumption is actually going up over time. The only time it really dropped was in the great financial crisis. It dropped for a little bit there, right? And then during Rona, obviously, the shutdowns, travel being shut down, it's natural that oil consumption would go down for a few years there, right? But boom, right back to all-time highs in regards to oil consumption. So there's a need for oil more than ever before, right? We're not magically getting more oil. That doesn't work like that, right? There's a finite amount of oil on Earth. So the fracking's been around for 15 plus years now at this point in time in terms of that technology. So that's nothing new. So, and yet oil is very suspect, extremely suspect, okay? Now, Fed minutes come out here today. Some very important things happen here. Fed minutes point to likely rate cut coming in September. The vast majority of participants at the July 30th through 31st meeting observed that if the data continue to come in about as expected, it would likely be appropriate to ease policy at the next meeting. Very important there. Markets are fully pricing in a September cut, which would be the first since the emergency easing in the early days of the Rona situation, right? So yeah, basically this Fed minutes tells us everything we kind of already knew, but there was one interesting thing I thought in that Fed minutes was that some Fed folks were actually feeling like they were okay if they started cutting in July, actually, which is interesting, which shows you how ready they are going to be for September. The fact that several folks were already thinking like cuts were fine in July, that means September they're feeling even better about cuts coming here. So that's basically in the bag. The biggest question really in my mind is, do they cut 25 basis points? Do they cut 50? My opinion is they should cut 50. But what I think and what the Fed is going to do is they're going to be two different things, right? Now, it's important you understand the last three cut cycles in the past 20 years when it comes to Fed fund rate being cut, right? Because it's about to get cut. So here we are in the situation. If we go back three cut cycles ago, that was a great financial crisis. And that was a cut into the great financial crisis, obviously an ugly situation. So that doesn't leave a good taste in your mouth when you think about, oh, the Fed's going to cut rates, right? Now, the hope is this time's different. They're cutting for the good reasons. It's because inflation's going down, right? And everything's great. And so we're going to cut rates. That's a belief. We'll see, right? But obviously in the 07 to 08 cuts, that was not the situation, right? It was ugly. Then the second cut cycle we had was T-Man. T-Man put a lot of pressure on the Fed. The president doesn't usually comment in regards to what the Fed should do or not do, right? A T-Man, he does things a little different. We know that, right? And he started commenting and putting pressure on the Fed publicly that they need to cut rates. And Jerome Powell and the Fed, they bowed to him. And they said, okay, Daddy, we're cutting. And they cut, right? So that happened. Then things kind of evened out there for a little bit. And then Rona hit and the Fed cut rates down to nothing, right? So now this leaves you in this situation looking at, what's going to be the reason to cut to zero? That's kind of my thought. Like, what's the reason to cut to zero over the next year or year and a half? Is it a recession? Like a big recession pushes people to say cut down to zero? Is it WW3 happens, right? We've got all types of those situations, and next thing you know, it's a reason to cut. It seems like there's going to be something that's going to make the Fed end up cutting to zero by the time it's all said and done, right? It's just a question of what is it. And we know the government, which the Fed is basically the government, right? They're supposed to be independent, but they all work together. We do know the government would love the Fed to cut rates down to zero again. Why would they love that? Well, one, it would spur economic activity, right? Two, and much more importantly, the federal debt. I mean, the interest payments the government's having to make at this point in time is ridiculous. It's insane numbers, like shocking numbers about how much is just going toward paying the interest. So the better situation, to be quite frank, is cut rates down to nothing, right? Spur economic activity, spur spending, maybe cause some inflation again in future years, maybe not this year or next year, but in future years, right? Spur some economic activity going. So then hopefully you get inflation in the system again. You might say, government doesn't want inflation again. Yes, they do. The debt levels are so huge in this country, you need to try to inflate it away as much as you possibly can. So you have everybody's salaries go up more, right? If somebody makes a lot more money, they get taxed a lot more. Capital gains, stock market goes up, real estate goes up, capital gains goes up, boom, boom, boom. Government can collect more money. It can get the debt situation in a better situation. So the government really has incentive to get these rates down as much as possible. The question is, what's going to be the excuse to get us back down to 0% Fed funds rate? But don't be surprised if, we end up there by the time this story is all said and done, right? It'll just be a question of where they get. Now, there's one other thing. Do you notice there should be something else you notice here? Something very important you notice. Do you see it? So, right here, there was kind of a flatlining in the cut, right? Same exact thing in between this cut cycle. So you could have broken up these cuts into two separate cut cycles. You could have said this was a cut cycle here, flatten out, and then the last cut cycle. Just like the T-Man and Rona cut, you could have said, straight down into that cut, boom, right? I'm wondering if a very similar phenomenon is going to happen in this situation, right? That's going to be really intriguing to see if this is a similar situation plays out in this next cut cycle, where we have a massive drop in rates, right? Then it kind of flattens out for a bit. Everybody thinks, okay, the Fed's maybe done cutting rates, and then boom, something else happens, right? And next thing you know, Fed funds rate back down to 0. That should be interesting, right? Now, my other big question is, what happens with all this money in money market funds right now? We got by far and away all-time record highs. We're pushing close to $6.5 trillion in money market funds right now. The number's probably bigger than that. And so when this easy 4 to 5% everybody can get right now in treasuries, high yield savings accounts goes bye-bye, which that's going to be going bye-bye very soon. And when I say very soon, I'm talking like in the next 6 to 12 months, closer to the next 6 months, right? If you're getting 4.5% on a savings account right now and you're getting 5% in your treasuries, I'm just telling you that's going to be going bye-bye very soon, likely within 6 months. And so what happens when you can't do that anymore? Are people going to keep money over there? Or are they going to start moving that money into the stock market? That's a fair question, right? Now, keep in mind, we have over 2x'd the amount in money market funds just in the past 6 to 7 years, which is incredible, right? We went from here, if you look back at kind of like 2017, 2018 timeframe, we had about $3 trillion, and now we're like 6.5 trillion deep in terms of money market funds. That's a lot of money increase there. Now, there is something scary here, though. Look at this. This is very scary, right? If you look back to the great financial crisis, guess what we had? We had a phenomenon where the amount of money in money market funds went to the moon. It went to the dang moon, right? I mean, look at this. We went from under 2 trillion, so we can call it about $1.8 trillion, right, in money market funds, to the next thing you know, we're at about $3.8 to $3.9 trillion at the peak here, right in that great financial crisis. So that was about a 2x. This is about a 2x. I mean, that's the type of stuff you look at and you kind of get scared. You're like, what's going to happen here, right? So, and keep in mind, even though the amount of money in money market funds went to by far and away all-time highs, that did not prevent real estate from crashing. That did not prevent the stock market from crashing, right? We still witnessed a real estate crash and a stock market crash, even though money market funds was at a ridiculous record high. So this is why a lot of people are making a mistake here, and they're assuming that the stock market can't get hit in any substantial way over the next few years, and the real estate market can't because there's so much money in money market funds. We had that exact setup in the great financial crisis, and it still happened. So if you can't, if you think it's impossible for the S&P 500 to go down 20 or 30%, if the economy got really bad and we saw really high unemployment and we had banking problems and all those sorts of things, right? I got news for you. We could see a 20, 30% drawdown in the S&P 500, even with this ridiculous amount of money over there in money market funds. It's a potential, and you have to consider this. Don't bank on it. Where a lot of people screw up is they see stuff like this and they bank on it. They're like, this is the only way it's going to work out, and then they end up screwed, right? And they're like, this time was different, right? So don't bank on it, but be aware of that. Be aware of that. Very, very important. Now, small caps are rolling. Honest today, 7% plus up move. Elf 5%. Fubo another 4% plus, just crossed $2 here today. Even Avant was making a move up. That stock hasn't done anything in years, right? So my opinion is these stocks will continue to have a lot of fun until the Russell 2000 goes back to sleep. Now, keep in mind, if you think the Russell's been on a big run, I have news for you. It has not even begun the run for the most part, right? Check this out. This is a 1-year chart of the Russell. You would think, like with some of the action in some of these small caps recently, you would think the Russell's doing amazing compared to other indexes. It's not. A 1-year chart shows us the Russell's up about 17%. The S&P 500's up 27, almost 28%. That's insane. About 11 percentage points up. And then the Qs, the Nasdaq's about a 2x of the Russell's performance. What? So the moral of the story is the Russell has a lot of catching up to do over this next 6 to 12 months. If we're going to get into a risk-on market because the Fed's cutting and it's not obvious, the unemployment's going to go 5, 6, 7%, the Russell could have a lot of fun over this next 6 to 12 months. And I mean a lot of fun. And keep in mind, everybody's favorite bull, Tom Lee, he was just on CNBC recently talking up small caps again. If the Fed starts cutting, money on the sidelines could funnel into small caps. This is very Tom Lee-ish. This is what he's been saying all year. And yet, I mean, at the end of the day, Russell's just been underperforming, sadly. But, at some point in time, as they say, a broken clock's right twice a day. And Tom Lee might end up finally being right. And we might get this Russell to fly, which means these small caps, you haven't even seen the fun yet. If the small caps do what Tom Lee's talking about they're going to do in a year end, and these really play catch up for this next 6 months or so, guys, you haven't even begun to see the fun yet. Now that leads me to this segment of the video, which is what small caps do I like the most into year end? And keep in mind we got about 4 months left in the year, right? Now also keep in mind these stocks I'm going to share with you in order that I like the most for the next 4 months into year end. This does not mean I like these stocks in this order the most the long term. Like my long-term list might be a little bit different of me thinking about which stocks have the best 3-year returns, 5-year returns, 7-year return profiles, right? This is just looking at it from kind of into year end. Here's my opinion. The stock I like the most into year end is Fubo TV from the small cap stocks. And the reason I like this one the most is this one has the most catch up to do here. They have the most, I think, positive momentum going for them when we're talking about obviously the lawsuit situation going in their direction. That's huge. Additionally, we have a business that's bringing down their losses substantially, right? While increasing their revenue and their subscribers. That all bodes very well for the company. So we kind of got a boogeyman out of the way in regards to the venue service. And now it's looking more and more like Fubo set up very well here. If they come in their next quarter, report good subscriber growth, good revenue growth, but that bottom line loss gets brought down a lot. They keep reconfirming 2025, getting to some profitable quarters in that year. You're going to completely take bankruptcy off the risk. You'll see the stock fly to the moon over this next 4 or 5 months here. So obviously it's already started, massive move. It's already up about 55% in the past 5 days. So this one could get very, very, very fun into year end here. So that's my favorite pick when it comes to small cap stocks into year end. My second favorite pick from small caps into year end is the Planet, actually. The Planet, this is like super small cap. It's a 60-cent stock. I think this one's going to perform tremendous into year end. Tremendous. Obviously, the scheduling of Jack Jackson into a different schedule is that process continues to go. That's going to help this company immensely. The 280E changes going to help this company immensely. And I don't think people are ready for the growth rates the Planet's going to start putting up as soon as this upcoming quarter, which will be announced in probably 2 months from now or so. Probably 2 months-ish. I don't think people are at all ready for the type of growth rates this company's going to start putting up. Plus, the margins are getting better. That bottom line is going to start to fix itself in a massive way. Whew. Yeah. I really don't think people are ready for that one. I really don't think people are ready. So the Planet, I love the setup into year end for the Planet. That might be my favorite of them long term. Kind of seeing what I'm seeing from that Vegas location and how much traffic, I see traffic increasing. Jeez. Now, my third favorite pick as far as these stocks go, these small cap stocks go into year end, is the Honest Company. So Honest Company sets up very well into year end as well. This one has a lot of momentum behind it. It's a stock that a lot of people want to get in now. And the reason being is they're flipping over to that profitability side. They're starting to cash flow, right? The revenues are trending much better than anybody anticipated. It's clearly Carla, the new CEO of the company, as well as Kate Barton and these other folks, right? Dave Loretta. They all have the company pointing in the right direction, which is going to attract a lot more people that like to be in a stock like this. And the more folks are going to be attracted because they're going to say, okay, this is a name that has major EPS upside over the coming years, likely, major revenue upside over the coming years, likely, right? and they're in what would be seen as a pretty stable business model, right? Diapers, wipes, beauty products, lotions, soaps, all those sorts of things. Like that's kind of what people would look at as like a recession-proof business. And you'd think their business would be devastated over the past few years with how hard inflation's hit people and the fact that this is a higher priced product. And it's just, we've seen their numbers just get better and better. So that's why the stock's up 227% in the past year. And I think it's going to remain in favor. So those are my 3 favorite stocks. Just to be quite frank, when it comes to small cap stocks into year end, they all set up very, very well. So love that there. Now, in regards to the public count, so public count here today, $3.5 million, up $29,000. Obviously, the count's done tremendous for us, and it's been carried by a few stocks. Elf comes to mind, Meta comes to mind. A few of those. You gotta know where to position in the market, not just in terms of the right stocks, but how you're sizing a position sizing. It's very important, right? So what are we going to look at here? What stocks am I planning on selling, buying, just holding, those sorts of things, right? Well, let's get rolling here. So Meta, obviously big dog, $909,000. And I do believe, this might be a big prediction, I do believe Meta is going to break $1 million plus in the next few months. I do believe it. I believe Meta is going to go to $1 million plus. We'll see in this position, which will be a very exciting day when that does happen, because I've never had a position in the public account ever be $1 million. So it's going to be a very exciting day. We'll go out to the Cheesecake Factory that night, or North Italia. Okay, we'll go to Flower Child and celebrate, because that's going to be that's just something I've never seen. Like imagine $1 million just in one stock. So in regards to Meta, am I thinking about selling it? I can't buy it. And the reason I can't buy it is not because it's not a moneymaker. I think it's going to continue to be a moneymaker, not only for the remainder of this year, but for future years. But I can't buy more shares because, look, the whole portfolio is 2.3 mil. I got 900,000 rolling in this one, right? It's a huge position. So I can't really invest more into it. And plus, there's a lot of other opportunities in the market. With that being said, am I planning on selling any? It just doesn't make sense to. And this is one of those stocks I look at and I'm like, man, it'd be awesome to take some profits here, but it doesn't make sense. It doesn't make sense at all. I mean, they're spending a fortune on AI and the metaverse simultaneous right now, and they're still a money machine. They're still a money machine. And they're spending on these 2 huge growth categories. They're one of the very few companies, folks, one of the very few companies that's actually making money from AI. AI is making them substantial amounts of money because it's letting them serve up better videos, right? It's allowing the company to essentially have marketers get in front of the right people for their ads, which allows them to make more money, right? Which is great for Meta, because then it means the ROI goes up on your Meta spend, which means Meta can charge even higher and higher ad rates, which they're clearly being able to do, right? I mean, between obviously Facebook, Instagram, WhatsApp, they just started to touch the monetization in regards to Instagram Reels. They just started to touch the monetization in regards to WhatsApp. Oh my gosh. I mean, it is just set up so dang well. Threads continues to build out, right? They're not going to monetize Threads anytime soon, though. But Threads is exciting because once they hit around 1 billion users, don't be surprised if they start to really advertise quite a bit through Threads. So that's a big opportunity for the company. So this is great. I mean, valuation's just not pushed on the stock yet. If it was a 35 forward P, I might be inclined to take some profits, right? Because I'm like, oh, okay, it's kind of up there. 25? And keep in mind, Meta's been a company consistently beat numbers. So these are analyst estimates, looking at the stock versus what the EPS estimates are. Don't be surprised if these are low. Don't be surprised if they're low, right? Look at the EPS growth for this company. Look at the revenue growth for this company expected here. I can't part with that premium of stock. That leaves me the second biggest position in the portfolio, Tesla, right? Tesla, we're up 332,000, up 711%, which has definitely been dwarfed by Meta now at this point in time. But Tesla's a much bigger percentage gainer. I didn't have nearly as much money back in the day when I was investing in Tesla as I did when I was investing in Meta, right? So, Tesla, here's the deal, all right? What do you see when I show you this chart in front of you right there? What do you see when you see that? What you should see is, oh man, it's had to be brutal with a capital B to try to sell cars recently. And it has, right? We've seen that from Tesla. We've seen that from honestly all the auto companies. We've seen it from the auto dealers. It's gotten brutal to try to sell vehicles recently. And it's because interest rates went to the flip and flapjack and moon. I mean, we're looking at, car loan rates close to 8% here recently. That's not good. Compared to, it was at kind of the 4 to 5% range for a long time. As in like a decade long of like 4 to 5% range. And now all of a sudden you talk about near 8%, it's devastating. So big ticket's been destroyed the last couple of years. In terms of existing home sales, horrible last couple of years. In terms of auto sales, it's really gotten rough here recently, right? It took a little lags to get in there, but now it's gotten really rough. Ask any of these automakers, they'll tell you, auto dealers as well. And then additionally, like furniture sales, anything like that's been brutal. But the good news for Tesla, interest rates are going to likely come down, and that should bode very well for its business. And then if we talk additionally, we can get that cheaper vehicle out in the market at some point in maybe late 2025. I know they're talking about getting out there sooner. I'm expecting at the earliest late 2025, along with a Cybertruck with a 60 in front of it, which I think could happen as well. It's going to bode very well for this company. Then you have all the other stock-related stuff, like they're going to show off the robo-taxi here soon in the next couple months and all that stuff. That's more stock-related. I'm just kind of thinking business fundamentals. If we can get these interest rates to drop quite a bit, it's going to be a good thing for Tesla's business model, right? Now, additionally, here's a deal, okay? We don't know what's going to happen with the election. And it does matter for Tesla because there's a fear that if T-Man gets in office, he's going to take away the tax credits, which it's not a small amount of money. Those tax credits are large, right? It's a potential if T-Man does win, he would take away those tax credits. But Elon's, and him have gotten close here recently. Listen, guys, Elon's freaking, he didn't get this rich by luck, okay? A lot of people always assume Elon doesn't know what he's doing. He's crazy. And a lot of times I even doubt Elon. But, damn it, he's always the smartest one in the room. He's got all these guys wrapped around his finger. And so, the relationship there with T-Man, let me come out, publicly support T-Man, it's brilliant. It's brilliant. Because now he's in with T-Man, and now if T-Man does get elected, and T-Man says, you know what, we're taking away the tax credits on EVs, Elon's going to be like, hey, what the heck, man, I had your back. You don't have my back? So, I don't know. We'll see where all this plays out, right? Now, if Harris wins, probably going to keep the tax credits as well. So I don't think that's going to go away. I think there'll continue to be a push toward EVs and all those sorts of things. So if you could talk about tax credits, along with interest rates going down, along with the mass vehicle out there at late 2025, along with a Cybertruck that starts at 60,000 range, oh boy, it's going to be a lot of fun in regards to Tesla. I mean, a lot of fun, regardless of what happens with the unemployment rate in the short term. PayPal. So in regards to Tesla, am I looking to buy more shares? Not right now. But am I looking to sell? Absolutely not. Right? We've been through the storm already. It's like, why would I want to sell when we've already been through the storm? PayPal. So PayPal stock finally is starting to get some momentum. Finally. I mean, a lot of people have been waiting for this for a while. Now, we'll see. The thing with PayPal is the fundamentals are going so good, right? The valuation's so darn attractive on PayPal. Alex Chriss is doing such a good job leading this company now. He's been there for a little under a year. He's doing a great job. They're expanding products, but there's a lot of bag holders in regards to PayPal. And I don't like to use that term often, but it's a term that is used for a stock that had been downtrending for years. Because let's be honest, myself and probably some of you guys watching are probably the only people that have made money on PayPal stock. I mean, literally, if you've been buying PayPal in the last year, you're a moneymaker on PayPal. But I can tell you, if you were buying PayPal, more than a year ago, and back that up to 5-6 years ago, you never made money on PayPal. Heck, you could back it up all the way to the split off of eBay, basically. You never made money on PayPal. So it's a very select few have actually made money on the stock. But what I do believe is PayPal had such a long downtrend for such a long time that I do believe there's not that many people left to sell. I believe most people that wanted to sell have already sold now at this point in time in regards to PayPal. So that's something that bodes very well. Valuation looks very, very attractive on PayPal. The revenue growth looks good. The earnings per share growth gets good. We'll see if they bring these numbers up even more. Alex Chriss is really focused on making PayPal a growth company again, which is important because Alex Chris making this a growth company again, along with a P ratio range that is low. This is trading like a value stock, right? It's trading like a traditional big bank or something like that. If we can talk about this as a growth company again, and think about how bad the consumer's been hit over the past few years, and yet PayPal's still been able to put up 8% revenue growth in this environment, that's pretty darn good. That's pretty darn impressive. So PayPal, I'm good with what I own here. I'm not looking to add more shares of PayPal, but am I looking to sell out of these shares in the public account? Absolutely not. I think PayPal could be a lot of fun over this next few years. In recession doesn't scare me in regards to PayPal whatsoever. Like, those come and those go. That is what it is, right? Now, if you're looking to access 1000xstocks.com, you're looking to access my private group, my private stock group, private wealth group, that's pinned comment down there today. You can click on that. You can fill in an application. You get access to all my best course curriculums, teaching you everything I got up here, identifying stocks, next opportunities, things like that, exclusive weekly videos from me, plus access to 1000x, all in depth there. Yeah, that's going to be pinned comment down there. Click on that, fill out an application if you're looking to join us in there. We'll see if we can get you in there maybe next week. Amazon's next biggest position up here, $190,000, up $76,000 so far in this one, 67.77%. Amazon's actually kind of a lagger. Keep that in mind. Stock's actually kind of a lagger. People are looking at this one as actually an opportunity in this market. And when I look at Amazon, the 2-year forward P is crazy. I mean, under 30 on a 2-year forward P for Amazon? Guys, like that never happens. Like, that's insane. So I'm looking at Amazon, and I think Amazon looks really tasty. Amazon looks so tasty that if I hadn't started a position, I would be tempted to start a position in Amazon. That's how good it looks, right? Am I looking to buy more shares? No, because I have other opportunities in the market, and this is already a good-sized position for me. It's another, what I call, steak and chicken position, like the entree of the meal. And so Amazon's looking really good. I have no plans to sell any of those shares in the public account or buy any. It's just a hold for me right now. Palantir. Look at Palantir. We're now up 268% on the stock, up $131,000. Palantir is an animal. It's an animal. And if you're talking about one of the few companies, actually, I could make an argument that they were the only company, really, truly the only company in the public market that was actually set up for this AI wave before the AI wave even, no. 2 companies. There's only 2 companies I can think of that were properly set up for this AI wave before the AI wave came. One is NVIDIA, the other, Palantir. Only 2 companies. Palantir was at how did I always describe Palantir for you guys back in 2022 when I was buying the stock? They're at the cross sections of data and artificial intelligence, right? And being able to use your data as a company, as a government organization, whatever, in a much more efficient, smarter, more intelligent way, right? And having AI systems be able to do these sorts of things. And obviously Palantir's got product suites way more immense than that nowadays. And it's just like, they were set up so well. And then the whole world came to them. And when you add on an A+ balance sheet, when you add on profitability skyrocketing for this company, when you add on revenue growth accelerating quarter after quarter after quarter for this company, when you add on a CEO that people looked at was crazy and now we're starting to look at as genius, right? And that's all changed just in a matter of 3 or 4 years from a guy that what's this guy talking about? He's crazy. What? The world's going to get more dangerous? What? It's going to be all these conflicts. What's he talking about? Oh, wait. Oh my gosh, it actually happened. Like, what? This is crazy. Now they're looking at him like a genius. So Palantir, I could understand if somebody doesn't want to buy Palantir, right? Because of the valuation. I mean, a 94 forward PE, 78 2-year forward PE. Something to keep in mind, Palantir might emerge a lot more profitable than analysts are at here. That's food for thought. That's food for thought. Analysts might be too low with their EPS projections for not only this year, but next year, which would then make this story a lot more exciting. But even if, let's say, analysts are too low, and let's say the 2-year forward P is really 60 on the stock. I mean, 60 is still dang high when the market trades at 15, right? And so, I get it. If somebody doesn't want to buy Palantir, I get it. But could I sell Palantir? No. Here's why. You can't sell a company that continues to execute at a higher level than you anticipated. I made that mistake with Elf back in the day. Back in the day, I owned so many more shares of Elf than I own currently. But I made a huge mistake in regards to Elf. As the company executed better and better and the stock price went to the moon, right? I sold into strength and I sold into strength and I sold into strength. And it was a huge mistake because I used to hold nearly 10,000 shares of Elf. Today I hold 1,000. It's a big mistake. Did I make crazy big profits and make a ton of money? Yes. Could I have made way more money if I just held? Yes. So Palantir, I'm looking at a company here that is executing at a higher level than I anticipate, right? With products that are even more impressive than I thought they were going to be. Why would I move out of that position? Just because it's gone up a lot? Just because the P goes to whatever number? Well, if this company continues to execute the way they're executing, they're going to eat up those forward Ps and those 2-year forward Ps. And next thing you know, you'll look out there and you say, hey, Palantir was actually cheap at $30. That's crazy. We look at Palantir today, right? We look at Palantir today, or even last month or a few months ago at 20. And we're like, Palantir is expensive at 20. You look at it today, you say, Palantir is expensive at 30. And you could make a strong argument based upon what I just showed you with those PE metrics, right? But it is very possible in 5 years from now, we look back and we're like, dude, $20, $30 for Palantir, that was so cheap. Look what ended up happening in the earnings per share. Then they did that big buyback. And then they did this, right? I mean, over a 5-year span, a lot could change. Imagine Palantir starts to become way more profitable, produce way more cash flow than we thought, right? They start buying a ton of shares back and take down that share count, which caused that EPS to go up even higher. Imagine they make an acquisition here, a tuck-in acquisition that allows them a new product category to sell into, right? Imagine they launch another great product or two over the next 5 years, which cause that revenue to go much higher and the profitability. I mean, all of a sudden you could be looking 5 years from now and be like, I wish I could buy as many shares as I possibly could at 30 for Palantir. That's why I look at a Palantir and like, do I want to buy more shares here? No. Do I want to sell? Absolutely not. I can't do it. I've made that mistake too many times over the years where our company did better and better than I anticipated, went up a bunch, and then I took profits. No. Palantir, we're holding those 5,555 shares for a while here. Talk to me in a while from now and then we'll see. But for right now, And that leads me to Elf, right? Elf, next biggest position here, $170,000 position. We're up $162,000. It's almost comical. $170,000 position and up $162,830. So no way. That's insane. My total cost basis on Elf is $7,279. Today, I gain more on Elf than I invested into Elf. That's wild. That must be how Warren Buffett feels every time he collects those Coca-Cola dividends, right? And he's like, man, I just got more dividend money than I invested into the whole company back in the 80s. I mean, that's wild. Wild. So in regards to Elf, this is another Palantir type stock, right? Where it's like, I can understand if somebody doesn't want to buy into Elf because they're looking at the forward PE, they're looking at the 2-year forward PE, and they're like, oh, geez, that's expensive stock for a cosmetics company, right? And they're looking at growth rates that could be decelerating a lot next year. Keep in mind, in regards to Elf, that's always a thought process. Oh, growth rates are going to decelerate. Oh, growth is going to go away. And then what happens? Elf comes in and beats numbers and beats numbers and beats numbers. Even look at this last quarter. Analysts were thinking like 40% revenue growth. Company comes in with 50%. They do it continually. Tarang is an epic CEO. There's only one fear I have with Elf. Only one. I haven't talked about this publicly yet. This is the first time I've talked about this publicly. So, the Estee Lauder CEO is going to be stepping down at the end of this upcoming fiscal year. It means there's going to be a job vacancy there. The board of directors is currently looking for somebody to replace him. They need a top-tier candidate. Estee Lauder is not a company to play around with. This is a premium job. It could be seen as the most coveted. No, it can't. It is the most coveted job in all of the beauty industry, the most. I look at that job as like that's number one over everything. So, Tarang. I think Estee Lauder, my opinion is they're going to try everything in their power to get Tarang to leave Elf and go over to Estee Lauder. And I think it's going to be hard for him to turn that down if they do. And the reason I think it's going to be very hard for them to turn that down is, it's freaking Estee Lauder. Like how are you going to turn that opportunity down? You're talking about Estee Lauder, which could be If he gets that company back on the right track and the growth rate's going, I mean, over a 10-year span, he could turn that into a company that's worth a $500 billion market cap. Are you going to turn Elf into a $500 billion market cap? No, it's just not realistic, right? The best case scenario for Elf, in my opinion, is maybe it grows to like a $20 to $50 billion market cap. And the reason being is Elf's products are just so low price points that you just can't, there's only so much that can happen there. And so I could see Elf being a $20 to $50 billion market cap over the next 10 years, but I can't see it being a $500 billion market cap. Estee Lauder, because of how many strong brands they have and the price points that they have on their particular products, I could see how if he turned that company around over the next 10 years, it could become like a $500 billion market cap, right? So, I mean, that would be hard for him to turn it down. That's my one fear in regards to Elf. I don't know what's going to happen there, but if I was the board of directors at Estee, I would do everything in my power, everything, to roll out the red carpet to Terrain, give him as much money as he wants, give him as many stock options as he wants, give him everything the man could ever want. Because I'm telling you, the job he's done with Elf is a record breaker. It's beyond epic. And if he does that same thing for Estee, even if you paid the guy between salary and stock options, let's say you pay him, $3 billion, which that'd be a crazy number, right? That's not happening. Let's say you pay him $1 billion over the next 10 years, which is a crazy number. Let's say he's CEO for the company 2025 through 2034, right? And he makes $1 billion in comp over that amount of time between stock and his salary. Well, if he increases the market cap $100 billion or several $100 billion, who cares? What's a drop in the bucket, right? And that's the way Starbucks is looking at their new hire, the Chipotle CEO, right? They're looking at that, and whatever they pay him is going to pale in comparison compared to his salary. Compared to how much the market cap's gone. Look at the market cap went up like $20 billion in a day just by hiring him. Even if you pay him a few $100 million, it's nothing. That's why they rolled out the red carpet for him. The man's allowed to work from his house in Newport Beach, California. He doesn't even have to go to the headquarters of Seattle if he doesn't want. I mean, that's insane, right? That is insane. So, anyways, got a little off subject there, but, that's my one fear in regards to Elf. But Elf remains a hold for me. Like, why would I sell that company when all they do is surprise to the upside? You can't sell a stock like that. No. I've made enough mistakes in regards to Elf and selling shares over the years, right? Revolve is my next biggest position, $63,000 position, up $29,000, up 84% on this one. And in regards to Revolve, I do believe analysts are far too low in their EPS estimates. And so, therefore, I believe Revolve in reality right now is far cheaper. I mean, far cheaper than anybody's anticipating. Remember, the company's net income, their EPS recently, it was up over 2x year over year. No one really saw that coming, including myself. I mean, whoa. And so you're going to see Revolve's EPS go up in a ridiculous way over this next, I would say, year or two. Now, if we talk about the consumer getting in a little better place, Revolve could be looking pretty. So I think Revolve's a buy. Am I going to buy more shares of Revolve? Probably not. Because like I said, there's a few other opportunities I'm really looking to add to that we're about to get into. But I do think Revolve's a buy here. Low 20s, absolutely, this one's a buy. Anything under 25, you got to give it to me. Now, in regards to Cheesecake, this is my next biggest position here. So far, we're up about 18.5%. Keep in mind, these numbers don't account for dividends received from these stocks, which, stocks like Cake obviously pay a nice dividend. Meta pays a nice dividend now, too. I love when that dividend money hits. Ooh, feels so good. Then I get to reinvest that into more stocks. So in regards to Cake, this is one I'm definitely looking to add more of on any weakness. And Cake, the reason I love this one so much is we're getting a value stock, but Cake is about to go into growth stock mode, in my opinion. Between North Italia and Flower Child, I've never seen it where a company has two legit restaurant chains on their hands that are going to become giants over the next 10 years. I've never seen that. This is a first for me. North Italia is going to become an Italian giant in North America, maybe even international, but certainly in North America. And Flower Child is going to become an overall giant over this next 10 years. I've never seen that. Now, usually you're lucky if you have one hit concept, right? Chipotle, for instance, right? or I don't know, Olive Garden for Darden restaurants back in the day. Like, you're lucky if you usually have one. We got two on our hands here. Two. So the expansion opportunity for cake that I don't think people have realized yet, they're going to start to realize it when the numbers start hitting more and more in 2025, 2026. And then they're going to start, and I think another smart thing for Cheesecake Factory is I do believe they need to rename the company in 2025. I think it'd be very intelligent. I don't know what they could rename it to. Hopefully they got a good name in mind. But I do believe they should rename the company. I don't, like I said, I don't have a name in mind. But the problem with the Cheesecake Factory name is a lot of people just hear that, like Cheesecake Factory, and they just assume like it's just a Cheesecake Factory. That's all they own, right? And they have no clue about these two massive growth concepts. They should, the balloons? Yeah, that's what I'm talking about. Change the name. Maybe they should change their name to Growth Restaurant Concepts or something like that, like Growth Restaurant Brands, something like that. Like, there's put into these investors' mind like this is some sort of growth concept, then let them do the research on it. What is this growth restaurant concept? Why is their stock gone up 50% recently? What's going on here? Why is their net income going high? What do they own? Oh, they own Cheesecake Factory. Oh, they own this North Italia concept. Oh, they own Flower Child. Instead of just hearing like Cheesecake Factory and just like thinking like, oh, Cheesecake Factory, I don't want to invest in that. That's just one restaurant concept. Like, so anyways, I'm getting a steal on this stock. That's what I'll say about that. I'm getting a steal. Nike, a buy. And when I say buy, I'm not talking buy. I'm talking buy. Easy money. Love it. Just easy money. I'm just buying as many shares. I mean, it's crazy because Nike, I'm buying this stock almost every single week right now. Almost every single week. I don't believe I'm going to be able to get this sort of discount on Nike ever again. So, yeah, man. The company also is going to emerge a lot more profitable, in my opinion, than where analysts are at for this company overall. They got a lot of spending decrease in regards to the business model going on right now and will be going on in 2025. I think their revenues are going to start trending back up very nicely in 2025. So you compound revenues trending back up in 2025 along with, right, potentially a strengthening consumer in 2025 as a whole, right? Given that real wages are likely going to go up quite considerably over this next, we can call it 2 to 4 quarters here. I think that bodes very well for Nike, along with dropping expenses. Whew. So I think the company's going to emerge a lot more profitable than a lot of people anticipate, and that's going to bode very well for Nike stock. And I don't believe I'll ever be able to get Nike at these sorts of prices again. I believe this is like a one chance. You get one chance at this one. Planet. So Planet, the crazy thing about the Planet is right now we're down huge on the stock, right? 53K. I think within 12 to 18 months, we're going to have a huge profit on this stock. That's the wild part is. Like literally we're down huge. And I think if we fast forward 1 year from now, 18 months from now, regardless of what happens in the market, I think we're going to be looking at a massive profit on this stock. And I mean, massive profit. I could be wrong. But seeing what I see with that Vegas location, the traffic coming in there, the Florida opportunity, they're supposed to have, I think on the conference call, they're talking about 32 stores open in Florida next year. Their revenue growth is about to go insane again. I think you're going to see that margin. It's just like everything's about to go, like, is starting to go the right way for Planet. It's going to continue to go that way for the Planet for this next, in my opinion, several years. I think it's going to be a lot of fun. Don't be surprised. I'm just telling you, don't be surprised if you look at this stock 12 to 18 months from now and we're sitting on a huge profit. Don't be surprised. Next one up here, Fubo. I think this one turns profitable for year end, just to be quite frank. So Fubo is looking really good. These are stocks I could add a little more to. Can't add a lot more to them because they are speculative positions. Fubo is very speculative. Planet's very speculative, right? This is not Nike. This is not Cheesecake Factory. So I can't add a lot to these stocks, but could I add some Planet here and there? Yes. Could I add some Fubo here and there? Yes. But I have to keep those position sizes small in terms of the amount of money I put in because they're riskier stocks, right? Obviously. SoFi, another one that fits in the category. I would love to buy some more SoFi shares here. The stock is a buy. I do have to keep this position sizing small. I do have to treat SoFi, unfortunately, like it's a spec position. Meaning like, could I have $30,000 or $40,000 in it? Yes. Do I want to have $100,000, $200,000 in it of my own money? No. Not because I don't think SoFi is going to do well. I wouldn't own the stock if I, thought the stock wasn't going to do well. The reason is SoFi is a financial. I don't trust financials. If the economy got bad, what could happen with their loan book, all those sorts of things. I have a lot of trust issues with financials. The fact that I even have a position in SoFi speaks volumes. Estee Lauder, definitely one I want to add a lot of shares to over this next bit of time. The company's going through a lot of uncertainty. Numbers haven't been great. CFO's leaving the company. CEO's leaving the company a year from now. So, it's a rough situation. But at the end of the day, their brands are so great there that they'll make it through this management turnover, this management change. New management will come in. And a lot will come down to who their new manager is. I mean, here's the deal. Let's say they actually landed Terang, right? Let's say they landed him. How much is Estee Lauder stock up the next day? I would say 33%. 33% in a day. That's my opinion. Now, some people might not know who he is, so they might have to do some research. But I believe once people did a little research and like, wait, how much has his stock gone up? Wait, what has he done with the financials of this company? I believe after that, oh my gosh, it would be insane, right? Once again, I don't know if they're going to land him or not, but my hope is I get as many shares built out as possible before an announcement like that comes. But we'll see kind of what happens there, right? The board of directors at Estee would be clueless if they did not try to approach him as their number one. Like, I would love to see the board of directors at Estee Lauder's. I would love to see their breakdown on who they're going after. Like, who's my number one we're going after, the number two, number three. If Terang's not number one, Estee Lauder, like, board of directors needs to all be fired. I'm just going to be honest with you guys. Like, they all need to be fired if he's not number one. Now, cash, sitting on $30,000 plus cash here in the public account, which I don't usually sit on cash in the public account. Very rare. The reason I'm sitting on that cash right now is because I got out of my Chipotle hedges, and so now I'm waiting to make my next hedge positions. So my next hedge positions will usually come in the fourth quarter of the year, so probably either October or November. Unless the market just goes crazy risk on for this next month, then maybe I make a move in September with some hedges for 2025. But that's what I'm waiting on. The other potential is, let's say we had some sort of market crash in the short term, which might not happen. But let's say it did happen, then I'm going to deploy that $30,000 out there in that sort of situation, right? So that's why I'm sitting on that cash. It's very rare for me to sit on cash in the portfolio overall. So right now, public accounts up $1.4 million in the plus. I love it, man. I want to see 2 million here soon. Toll Brothers, holy moly, this ain't no guacamole. All-time highs in the stock. It's beasting, and honestly, for good reason. Let's be honest. No one expected these home builders to be doing as great as they've ever done, right? Considering, like, if we went back 2-3 years ago and we talked about the Fed's going to raise rates insane, mortgage rates are going to go insane, no one would think these home builders would be doing good in that environment, and they are. But here's the deal. Toll Brothers numbers were really good. The CEO sounds extremely optimistic for the end of this year and into 2025 about demand. Demand was up 11% in the quarter. New home orders up 11%. I mean, dude, like that's phenomenal. That's as good as it gets, right? But I did write this for the private group last night in the breadcrumbs chat. I said, Toly Moly setting up for a mess eventually. Getting the timing right is going to be difficult. Company keeps piling up more and more inventory, now $10 billion plus. They'll likely climb in the next few quarters. All fine as long as the economy and housing market remains decent or good. If the economy and housing market went south for a couple of years, Toly Moly would get stuck with billions in inventory with no buyer, and as buyers would walk away. That would create epic losses for the company for a few years, and then when they would have to climb out of that housing price mess, that would take some time to work through. Once again, if the unemployment rate stays fairly low, housing prices remain up, and the stock market's good, should be no problem. It's more like if the dam cracks, the water will come pouring in quickly. Now, what is Toly Moly doing with these windfall profits that are pouring in? Are they stacking cash for a rainy day? Nope. Are they paying down their debt in mass to eliminate as much as possible? Nope. Instead, they're taking their windfall profits they're making right now and doing share buybacks with stock near all-time highs. They're paying dividends to shareholders in the short term. We know home building is very cyclical. Most of the time, it's a boring business. Sometimes it's a horrible business. 2007 through 2010 was a good example of that, right? Sometimes it's a great business. 2018 through 2024, it's been a great business to be in. You cannot count on great times lasting forever. It's an up and down cycle. Best case scenario is everything keeps going for Toll, as it has for the past many years. Worst case scenario, Fed starts cutting rates, mortgage rates drop substantially, leading to a flood of existing inventory coming onto the market, which leads to less demand for new builds. The economy weakens considerably in 2025, and unemployment goes to 6 to 8% range. Home prices start to drop by as much as 15%. Toll is forced to cut all share buybacks and dividends for 2026. Company goes from windfall profits to losses or small profits in 2026. Stock market also drops, which scares away higher income people. Higher income person can no longer get 4 to 5% on treasuries, which leads them to kind of feel a negative sentiment. If you talk about the market goes down as well, it could be a whole mess. That could be something that plays out, but getting the timing right is going to be difficult. All right, guys, appreciate you joining me. As always, thank you so much for being here. If you're looking to apply, join our private stock group, private wealth group, get access to 1000xstocks.com. Click the pin comment down there, fill out an application. We'll see if we can get you access to that next week. Much love and have a great day.